Hello, everybody, and welcome. I'm Bonnie Halper. We've been hosting these online investor chats since 2009, believe it or not. Usually we do them on Thursday, but we made an exception for Hayden Williams, who I've known since he was a founder. Remember that, Hayden? We go
I
way
do.
back.
I do.
Tastings. So you see, you can jump over to the other side of the table. So I write the weekly Startup One Stop newsletter and help founders with their pitch decks because nobody knows how to do them properly, as Hayden, I'm sure, well knows. And then I make investor introductions where and when appropriate. I'll put the link in the chat. It's startuponestop.com, and then just hit sign up, and it comes out every Tuesday morning. And we want to thank Joseph Katz for hosting us. Joseph, tell us what you do.
Hello, everyone. Thanks for joining. Joseph Katz. I help early stage companies grow. I'm a marketing professional, and I help companies bring on new customers. That's kind of my sweet spot. So anyone who needs help building customer acquisition, give me a buzz. Thanks, Bonnie, for hosting, and looking forward to what Hayden has to share today.
Yes. Oh, we have some more. So Hayden, we can do it one of two ways. Either you can introduce yourself and tell us about your background and the fund and your investment philosophy, or we can go around the room and people can introduce themselves so you know who's in the room, you get an idea of it. So up to you.
I'd love to hear from the folks in the room.
Okay. And it's always good to see Hayden. As I said, I've known him since he was a founder. So who Abby, tell us about yourself and what you guys are working on and what you all are up to.
Yeah, love attending these. Thanks so much, Bonnie. Have been coming for, I don't know, maybe little over a year. So my name is Abby Sugar, and I am the founder and CEO of Play Out Apparel. And my company is a gender equal streetwear and underwear brand. So we are really targeting the new Gen Z consumer that is values driven. And also specifically 56% of them shop outside of their assigned gender. So it's a completely new customer that nobody really retail wise knows how to serve. And it's even more exciting because when I launched in 2018, I was ahead of the curve actually. And in the past 5 years, society, the younger generation has caught up to us. And not only that, Time released an extensive research article just last month talking about Gen Z's changing understanding and opinion on gender, sort of gender expression, gender fluidity, transgender, non-binary identities, that type of thing. And this is all, how do we express gender? We express it through our clothing. So we use men's or women's categories in our designs. I like to say that the way somebody might shop a small, somebody might shop a 2X, bodies come in different sizes, they come in different shapes. So when we design bottoms, someone might buy a pouch front bottom, someone might buy a flat front bottom. Go for it, Bonnie.
We have to keep them a bit briefer so everybody. And I know that.
Yes. So that's that. I also, on the side, as Bonnie was mentioning, I am a fractional COO and a consultant and advisor for other brands. So we'll circle back to all those things. Go for it.
Yes. Oh, sorry. So Ian, tell us about yourself and what you're working on.
Okay, well, nice to be here. I'm in Toronto. I'm with the Virtual Film School, which is based in Hollywood, and we are an online film school, primarily targeting influencers right now. And I've been coming to these meetings for at least a year, and I always enjoy them. So I'm glad to be here.
And we're always happy to see you. So Byron, tell us about yourself and what you're working on.
Brian, but sorry.
Oh, I'm sorry, Brian. I'm a little bit dyslexic. I apologize for that.
No, you're fine. It's just whenever my mentors and folks that's raised me have always told me, if there is something that you can connect somebody to that's been good to you, first off, when entrepreneurs are great, entrepreneurs are phenomenal people. So if there's a good resource that has helped you and somebody that it can help, you need to make that introduction. And I benefit nothing from telling you about them, but it's just, I don't know when I'm ever going to see you again. So I need to say this right in and out that you need to talk to them. but also you already have, and that's awesome. So I'm happy that people who are good to me, that you are already involved with them. So I own a startup called EDU Rain. We partner with colleges to build these official off-campus housing marketplaces. And it looks like a B2C product, but it's actually an enterprise product helping property management groups with 100+ unit buildings rent to students at colleges in America. And we do have a pricing model for smaller landlords, but it's not really how we make our money. We just are trying to increase the supply of affordable housing for students by having them on our platform. And it's built from the student's viewpoint. So it's unlike our competitors' listing sites that are just like these things that landlords choose to make money. So we actually have a bunch of student development built into our platform. I've raised about $200,000 for our company, $100,000 and $104,000 in friends and family, about $90,000 in grants, and we're looking to raise our $1 million at this time. We do have one investor at this time that is we're doing due diligence with right now. So
thank you. We try to keep intros short. So, Steve, tell us what you're doing, what you're working on.
Good morning, Steve Schreiber. I am a consultant working in the B2B space for subscriber-oriented service companies. I focus on optimizing operational performance towards customer experience. So I help B2B companies in the SMB space largely, but service companies with particularly strong with subscriber-oriented service companies, but all service companies I can help. And I particularly focus on their operational performance as it reflects in their customers' experience.
Oh, thank you. So Hayden, finally, here we go. Take it away.
Yes, so great to be here. Thanks for having me. I'm based in New York. I have been at BrandProject for just over 4 years. At BrandProject, we invest in consumer-facing companies, primarily consumer products and services, but we will do consumer tech sometimes as well. But we've been around for 10 years. Ian, most of our team is actually based in Toronto. And what's unique about us is that out of our team of 7, 6 to 7 people on our team focus on operating, and I'm the only person who actually focuses on investing. So on our operating team, we have a CTO, CMO, CFO. So we work very closely with companies when we invest in them. So we invest early, pre-seed and seed on average, typically leading average check size anywhere from 500,000 to 3 million. In the early days of BrandProject, we did a lot in the direct-to-consumer space. So led the first round into food companies like Freshly, who we sold to Nestle, Daily Harvest, Chef's Plate, we sold to HelloFresh. Outside food, we've done stuff in personal care, pet, beauty. Recently, we've been doing a lot in healthcare. So our last 3 investments were in hospice, vet, and dental. And on average, we'll make 4 to 6 investments a year, anything based in the US or Canada. And yeah, that's a bit about us at BrandProject. Oh, Bonnie, I think you're on mute. Yeah.
I'm so sorry. Why are so many investors gun shy when it comes to direct to consumer or consumer products? It's true. Look at Abby's face. It's so true.
I think one reason is that a lot of funds have raised a lot of money and they have huge funds, and the exits in direct consumer are in general smaller. The ceiling is lower than maybe in some certain tech platforms. In some tech platforms where maybe there's a higher ceiling for outcomes or more outcomes in the CPG space. While there can be plenty of exits, they're not always as large as in pure tech. And so because of that, if you're a fund, and especially if you raise hundreds of millions or even billions of dollars, you need every investment to have a possibility to return your fund. And so I think they look at direct to consumer and say, I'm not sure I can more easily underwrite maybe a pure tech play than I can direct to consumer. And also that direct to consumer is more of a strategy or more of a distribution channel, not a strategy. In the early days, if you backed the first direct consumer player, then that is a strategy. But now everyone's on direct consumer and everyone's flooding Facebook and Instagram and all these channels to acquire customers. And so it's no longer everyone's there. And so it's more just a good channel to sell through, but not in and of itself, I would say, a strategy.
And
Okay,
I
thank
guess
you.
of my follow-up question to that would be, what is your background, Hayden? I know that Bonnie said, you are a former founder yourself. And so is your background in product or CPG that sort of led you down this road as an investor in this?
Yeah, so I started my career in investment banking, did that for 3.5 years, and then I quit to start a company, which was actually in the consumer tech space, so not CPG. But it was an app that helped people build new professional relationships.
Hastings.
So this is, so this was before, it was right around the time that Tinder was coming up. It was before Bumble or these types of apps, but it was an app where everyone on this platform was open to making new professional relationships in much the same way that you're open to making new romantic relationships on a dating app. So did that for 3.5 years, and then moved from that to a fund called BBG Ventures, where we invest in female-led consumer companies. And again, a lot in consumer, across consumer tech, CPG, and some B2B, about 70% consumer. And I was there for 3.5 years. And then now at BrandProject. CPG is what we do, consumer and products are one of the things we do, but I mean, our last 3 investments have been in consumer services. So I'd say CPG is certainly not the only thing we'll do, but it's still something that we're totally comfortable doing.
I wanted to give John an opportunity to introduce himself if you'd like to. John. Oh, you're muted at present.
Sorry. Yes, I was lingering in the cone of silence and the corner of shame for being late. My apologies, running from meeting to meeting, but I want to make this a priority. John Donovan, CEO, founder of an organization called Peertree, and we do learning community as a service. So Hayden, similar to your background, we use business relationships or relationships between individuals to share knowledge within private communities. We're invisible to the end customer. So businesses, individuals that serve large organizations use us as a service to reach their audiences, and then use problems and challenges as a way to build connections and get things done within organizations.
Oh, thank you. And we have another latecomer. That's okay. We're happy to see you. I'm trying to get there. Janice, do you want to introduce yourself and tell us what you're working on?
Good morning, everyone. Sorry to be late. I'm coming from the West Coast, and I actually had a call before this, which is insane. So I know, long days. I am the founder of Tausi Brands, which is a reinvention of a pillowcase that supports your head and neck while resting in an upright position. And boom, there you go. Keeps your head and neck in place. It is the antidote to the never useful travel pillow, and was invented for my dad, who was in a nursing home, slumped over in a geriatric chair. That's the founder's story, but there are so many applications to use this for lumbar support, for head support, for back support. So just want to be comfortable by the pool. And I launched on Father's Day last year, and I'm just really ramping up and raising capital at this moment as I've proven the market, and now we're ready to start going faster. That's the goal.
Oh, thank you. Any questions for Hayden since you're here and got up so early, even though we're your second meeting of the day?
I actually want to just sort of absorb what's happening, and then I'll let
Okay.
my questions start to form. Thanks.
Okay, thanks. So anybody else have a question at present?
I do. I had a question for Hayden.
Go ahead.
Our platform is built from the consumer's point of view, and we're using a mixed bag of consumer CPG tactics combined with enterprise tactics because of our relationships with the university for these like property management groups. How does like an investment group like yours see us? Because it is really the enterprise driving the revenue, but it's the CPG nature of it that is the value.
Well, every fund is certainly different. Obviously, for us, we're totally comfortable with B2B2C. Especially, I mean, in any consumer platform, we're always fans of whether it's different. If there's oftentimes B2B2C can be a great way to circumvent sometimes, again, paid acquisition channels and get access to a wider swath of potential customers. And so, as long as the consumer is the end user in some way, there could be like some software or program that companies pay for and give it so their employees kind of as a benefit, but then the employees are the ones who interact with it. And even that we would think is like, we could spin that as B2B2C. And so for us personally, we just wouldn't do something that was pure just software that, at a company was, administrative software, but that the employees or consumers never actually interacted with it. But as long as the consumer uses it in some way, then for us personally, we would view that as something we'd be interested in. So that doesn't have to be pure direct to consumer or anything like that.
I thank you so much for that, because of the nature of our space has been so unique of what our platform is. Like even figuring out what category, is it fintech, is it prop tech, is it ed tech? It took us a little bit of time to land on it's prop tech. And it's prop tech because of the business relationship. And then is it B2B, is it B2C, so it because it's a nuance. And I thank you for that. That's why we do stuff like this.
Yeah, totally.
So next question. Ian, you always have a question, and they're always good questions.
Yeah, I was very interested. Hayden, you mentioned you have some teams in Toronto. Could you say a bit more about those teams, and maybe you're looking for people? I know some people that I know who might be interested, depending what's going on.
Yeah, so we're not hiring, but our team is all in Toronto. So we're a team of 7. I'm here in New York. Everyone else is I'm in New York. Our CTO is in Jersey, and then everyone else is in Toronto. And so we have a CFO, CMO. Our whole model is most of the people on our team are focused on working with our portfolio companies, and then I'm focused on finding new companies to invest in. And so the team up there are the folks who most of their day is spent working with our companies. We will also incubate companies occasionally as well. We'll, on average, maybe incubate 1 company a year and then invest in 4 to 5. And so the team up there are the folks who spend most of their day both working with the companies that we invested in as well as spinning up new companies.
Great, thank you.
Yeah.
Just out of curiosity, why is everybody else in Toronto? I'm sorry, Abby. I'll get to you.
No, go for it.
I was just curious.
Why they're in Toronto?
Yes, I was just curious.
Oh, they're Canadian and they are from there.
I figured it. I know, but I figured, but I mean, it's just odd that it just seemed unusual that everybody else is there. But go ahead, Abby.
Bonnie, that sounds like a very former New Yorker question.
Oh, yeah.
Shouldn't everyone be in New York City?
No, not everybody needs to be in.
So Hayden, I was going to ask, coming off of that, you mentioned, and from the BrandProject website, I know that you invest early, right? But having these 3 stages, right? Accelerating maybe 1 brand a year, the pre-seed and seed early stage investments, and then the Series A. Is there one area or one stage that is the most exciting for you, or that you're really the most interested in investing in at this time? Or where have you seen the most success with when you have invested or fostered in brands in the past?
I think the earlier we get involved, the more success that we have, because we feel like we can help de-risk a company. Because our CTO has been CTO of so many companies, and our CMO has been CMO of so many companies. And now you need the founder who has, that passion and the domain expertise and all that good stuff. So they're not replaceable. But to be able to surround them with people who've done this so many times before, as a former founder, I know there's so many traps that are so easy that I fell into, that are time wasting, money wasting, could be company ending, but all this stuff that you wouldn't know if you've never done it before. And so to have people in all these different to have experts in finance or tech or ops, where, for a CFO, we would never advocate that a pre-seed company hire a CFO because you don't have that kind of, you don't have those types of resources. But to have access to a CFO who can say, actually, for budgeting, I would do this, or for forecasting, I would do that, can be invaluable. So the earlier that we get involved, I think the more success that we see, because we can help just implement best practices and help in building that foundation that the whole company is built off.
I have a question. So when your thesis is pre-seed and seed, for your pre-seed, what revenue are you looking for? What MAU are you looking for, roughly in that area?
So typically for where we invest, MAU is not even a KPI because we're usually not investing in apps or anything like that. For the most part, it's most of our companies are products or services for the most part. And pre-seed, it's quite often pre-launch, so there's no metric that that we expect, because we're totally comfortable investing even before the product's launch.
How many checks have y'all cut this year?
In new companies, one, and then a number of follow-on events.
Okay, why is it such a low number in the new companies?
We just haven't seen any that we've gotten excited enough about to lead around. So, but not for lack of interest or dry powder. So what are 3 things that excite you the most when you're looking at an entrepreneur? Because it seems like you're investing more in the entrepreneur. Yeah, well, team is the most important thing. So we're investing in team because quite often there's no traction, there's no product. So the team is the first thing, and then second is we have to believe in our ability to support the team, that we think would work well, that we think we understand the space, that we think we'd have the roadmap to help scale. And so that would be kind of a secondary, but very important factor, that even if it's a great team, if we don't know the space, then we wouldn't invest, because even if we think it's promising, we only invest if we think we can be very competitive. So have you ever invested, what kinds of teams have you invested in? Because I've seen the gamut of guy with a bunch of advisors and people, oh, great team, to guy with no advisors and 2 people, and they're like, this is a great team. And I've seen a whole gamut of stuff. So what would you consider? So we've invested as late as a Series A. So we have invested in companies that are doing millions in revenue and have a team. And then we've incubated companies where we come up with an idea alongside a founder, or we recruit a founder and we work alongside of them. And we've done everything in between. So it can be team or person. Yes. Okay. Sorry, I just making sure, Yeah. It's a different kind of model, not one that I had seen when I was a founder. So yeah, certainly all questions are valid and on the table, because it's not something that's typical, I'd say, for early stage investing. And I've already emailed you my deck in my calendar on LinkedIn. Oh, great.
I didn't know if you wanted to share your contact information in the chat. Although mine went to spam anyway. Good. But that's up to you, Hayden.
What was that, sorry?
Oh, I said I didn't know if you wanted to share your contact information in the chat. That's up to you.
Oh,
I said,
sure.
although even my email went into spam.
Yeah.
So do you do
Hayden.
follow-on investment as well? I'm sorry, I didn't mean to interrupt.
That's okay. I was just going to ask a deeper question on the support you provide. You said you have CTOs, CMOs, COOs. How in the weeds do you get with the companies in the portfolio?
So on the finance side, we can just build the financial model and do the work. We wouldn't for accounting and stuff. We would always recommend a company hire outsourced first and close the book. So that's not something that we would do. But the strategic stuff of building budgets, financial models, forecasts, all that stuff, or some stuff that we can just do. And then on the tech and the marketing side, that can be, we just have one CTO, one CMO. So we're not actually, the as CTO, we can help architect the back end. If you don't have developers, we can help recruit them, or we can partner with an agency and kind of be the person that can help, again, say this is what you should build. But we wouldn't actually be doing the coding. And then same thing for marketing. Marketing is the lifeblood for most of our consumer companies. And so you need someone full time, all day, every day, hopefully not even an agency, someone in-house to actually be deploying dollars and thinking about how to grow. And so again, for marketing, we'll work with those people, but we're not going to be the replacement for the full-time person who's always thinking about this. So for tech and marketing, it's more strategic, high-level guidance, working with that person. And for the CFO, we would imagine most of our companies would not have a CFO in-house, and so we can just do that work.
Hayden, that brings up a question for me. I don't have a robust team. It really is just me. I have different people that I work with, but on some projects. So is that an impediment to you when you're looking at a company?
No. We've invested in a full founder with just an idea. So we are comfortable with all different stages of concept, launch, scale.
And are there any certain categories or like healthcare or different areas that you're focusing on right now, just because it's such a growth market?
We're most focused on healthcare services right now. So the last 3 things we did, we started a vet business, which will be like Bond Vet or Small Vet, if you're familiar with them, but in Canada. And so we launched a company called Juno Vet. We incubated that one and partnered with 2 founders whose last company that we had invested in and then sold to HelloFresh. And then a dental business where we invested, pre-launched a dental business that's all they do is preventative and cosmetic dental. And then a company that does at-home hospice, Medicare-funded hospice. They're trying to build the first consumer brand in hospice. So we've been spending most of our time recently in healthcare services.
And do you ever take like one company and not merge them, but for example, your hospice company, like my product is ideal for hospice people, like at end of life. I have a lot of testimonials of people at end of life who need that support because 80% of seniors have had a neck pain that's only from positional, falling asleep in the wrong position. And so when you see synergy within your portfolio, do you ever connect the two?
Absolutely. Yeah. No, we would never be heavy-handed, but we would always make the introduction and let the founders see if there'd be a mutually beneficial partnership.
Great. Well, I'd like an introduction to that group if possible.
Yeah. Well, I can ask that.
Thanks.
The only one thing I'll say is that everything they do is Medicare funded. So is your product covered by Medicare?
It's good. It's in the process.
Great. So yeah, that would I'd say, especially at that point that it's covered, it would be even more relevant because that is definitely something that they would never, upsell their customers on anything. Everything, all the DME that they provide is covered by Medicare.
Yeah, that's a whole crazy world.
Yes.
Yeah. Yeah, but I'm not sure how fast I'll get through that process. So I wouldn't want to get ahead of myself.
Hayden, you will never see a team like EG Rain ever because of what we just WashU, one of our college partners that's launched with us January 2024. They dropped $75,000 into paid internships into our company, and we have 25 interns this summer. Like,
oh wow,
free to us. Like, what do you hear when you hear a team like that? Like it's huge. It's a big team, but like we're not paying for it. What is that thought to you? Does that signal a red flag to you? Does it signal a green flag?
When you have a lot of interns?
Yes.
I would say it's neither, it's certainly not a warning flag, but it's also not, I think we wouldn't necessarily count it as something that's, long-term, given it the nature of internships. It's a great thing to leverage in the early stages of a company. So great in that perspective, but not like a moat or, something like a long-term advantage as a brand is or technology or something like that. So I'd say it's a great resource but wouldn't be too heavily over-accounted or discounted in, our investment.
So part of the reason I asked that, because the nature of our business is in the college space.
Mhm.
So it's kind of like, we're not a space for a bunch of internships. We have internships. And like you work and affect your environment, which leads to, that's why we have 100% placement into medium to high paying jobs afterwards, which then circulates the internships even more. I ask this because the way of doing things is, from how people have seen it, is like, you need to have 3 seasoned execs, 60 years of experience, go and get it done. There's no way a bunch of 20-somethings can get it done. And I've seen that time and time again across investors, even though unconventional tactics have been our success, and the conventional tactics have not worked for us.
Yeah, well, I think that's great. And we certainly are not prescriptive or dogmatic about any given way to run a company. And so I think creativity and playing to your strengths is the best thing for any company.
It sounds like it. Oh, I'm sorry.
Sorry, I think Abby had her hand up, and Bonnie, you were chatting, so I'll
No, go
step back
ahead.
for a second.
John,
Abby?
do you want to go? I was going to take this into a macro question.
I had a category question, so you can go first, Abby.
Okay, so Hayden, you mentioned your focus on consumer, right? And when we were talking about D2C, sometimes different investors or VCs not doing that because the exits are a little bit smaller, right? What do you look for in an exit? What is your hope for a brand that you invest in?
I would say we also would hope that an investment would return our fund. That's one thing. Now, the good thing for us is that this most recent fundraising is 75 million. Our last was 50, and so that's a lower bar than someone with someone with a 250, 500, or $1 billion fund. And then, at least I'd say 10, having the ability to 10 times our invested capital would be another thing we'd look at. Another thing we might consider is, can we get to 50 million top line revenue in 3 to 4 years? These are some of the things. There's not any one thing, but we do want to believe that there's an opportunity for an outcome, that there's people that would buy this business, the people who buy businesses like it. And then we kind of decide that opportunity.
And do you feel like with these exits that you've previously had, do you feel like, I know that you're a very early stage investor, but you've been able to be supportive or instrumental in connecting those founders down the line with those possible acquirers? What do you think your role becomes in the later stages?
Yeah, in some cases, we've made an introduction, and in other cases, it's been another investor, because we're the first investor and the first board member. But then by the time of exit, we may not even get a board more. There's been many more investors, and so lots of people, hopefully, that are helping the business, hopefully making these types of introductions. So while we might be there first, down the road, it's certainly sometimes I can point to areas where we can be helpful, but I'm certainly not going to take credit for every exit. And hopefully there's a lot of investors at the table and board members who can be helpful with those types of introductions.
John, you had a question.
Sorry, Bonnie, I interrupted you.
No, go ahead. You said you had a question.
Okay, thank you. First, Joseph, thanks for inviting me. Now I totally understand why you thought to introduce me. Hayden, quick question for you. So on the category side, we're an example of an organization or a business that serves lots of verticals, which has been kind of interesting to have conversations with venture firms and investors, because they say, wait a minute, you're not healthcare, or you're not ed tech, or what's the best way to describe an organization or a company like ours that serves lots of verticals with a technology solution that helps to make them more efficient? So our current customers are healthcare, cybersecurity, higher education, K-12, healthcare in terms of nurse education, patient education, adult daughter, senior care. There's lots of verticals that use us, and we're in the background and very happy to stay in the background.
I guess it would just be, you build technology that helps companies do X, and the investor can ask a follow-up question about what types of companies, and you can say, well, all sorts of companies. But given maybe there's the whole idea is that no matter the industry, or there's many industries where companies face the same challenges, and that's so you can focus more on the solution that you provide rather than the exact type of company that it is. And I think that I would imagine we don't focus on tech investing. We'll look at it sometimes, but I would imagine that most tech investors would be comfortable doing that, as far as sure, maybe they invest in some vertical stats, but also hopefully have the willingness to invest in tech solutions that are broadly applicable.
But you said that you do invest in services sometimes.
Services, yeah, and like meaning like that, and we have four-wall businesses where they're actually providing in-person services, whether it's Botox or dental or vet or then the hospices. But that's kind of how we think of it.
Okay, thanks.
Hayden, do you have a time frame of when you're accepting, pitch decks from companies, or are you rolling? What is your how do you guys like to operate?
Anytime. Companies every day are sending us pitch decks, and I try to get back to them and within a number of days, whether it might be a fit. And we do have pretty quickly I can know whether it might be in our potential wheelhouse. And then the first step, if it is to do an introductory call. And then I share it with my team. And then if we think that we could really be supportive, then the next step would be if the founder meeting more members of the team. But to answer your question, it's on a rolling basis.
Oh, my question is, do you do follow-on investment as well?
Yes.
What size checks typically?
So maybe a first check in a business would be 1 million, and then maybe a next check would be 2.5 million, and maybe we do one more check after that. It could be 3 or something like that. So typically, in success, we might follow on first.
So I have a question about what are your thoughts on IPOs versus being acquired, and your thoughts on that? Like, do you just laugh an entrepreneur out of the room if they have an IPO, or and then I'm gonna add an additional point to that, if they have potential acquirers but the goal is IPO, so they know who could acquire it, but they want to IPO, would that be too much, or would that seem like a jumbled mess? What are your thoughts on that?
Well, first of all, especially having been a founder previously, hopefully now that I'm on this side of the table, I'm never laughing any founder out of the room. Although I've certainly heard of some horrible VC behavior. Hopefully I'm never doing that. And then for us specifically, with consumer investing, there's just fewer IPOs. And so as in consumer products, there's just far more, just in general, if you just look at the outcomes, there's far more acquisitions by strategic investors than IPOs. And then on the services side, and oftentimes selling to private equity might be an exit. So we typically tend to think that where we focus, acquisitions are most likely now in tech, people invest in marketplaces, type stuff like this, it might be flipped for them. So it's different for it everywhere. So I think it's different based on the investor and where they're investing. So given you're building, a marketplace, I think that an IPO very well may be a more likely or just as likely potential outcome as an acquisition. Whereas a lot of the areas where we invest, there's just more, again, given we have a small fund, we can get really excited about an acquisition of a couple $100 million, whereas much larger funds might only want the plus $1 billion IPO type of outcome. So I think it's dependent on the type of fund, the size of the fund, and what a good outcome looks like, because there's far fewer IPOs and acquisitions, but I don't know the math, but I'm sure more, if you're looking at multi-billion-dollar outcomes, those are typically IPOs, not acquisitions. So it depends kind of what you're playing for, which is dependent on the fund size.
I think that everything, sorry.
I just said thank you.
I think that everything that you're saying, Hayden, speaks to like when a founder is going out to raise, really doing your research on the people that you're targeting to raise from, right? I say this, I raised a pre-seed round last year before, the world was a dumpster fire of recession. And being aware in your, number one, the investors in your industry, the investors at your stage, and who have, an interest and an appetite in what you're doing, but also number two, what the market is doing. Because when you were just asking those questions, Brian, but also when you were answering, Hayden, I mean, all I'm thinking about is the Allbirds IPO, for example, and the fact that some of those investors are now suing Allbirds because of the way that the price has gone, the stock has gone, right? So being aware of, I think, the macroeconomic factors that I don't know, have come before from people that have taken different routes.
Yep.
I just know in our space, because of the money that I've raised, and because everybody that's on our cap table and on our convertible note are green and they're waiting for the first institutional check, everybody's doing everything they can to make sure that happens, which usually isn't the case with companies that's raised a little bit of money. Usually there's somebody that's holding a position, and they're going to hold that position, and it's going to be a fierce negotiation where the people with us is like, I can't believe this Black gay man is actually doing it. So we're going to do whatever we can to get the real money, because we didn't know we were going to be able to get a shot at that in the first place. And I think that the competitors in our space, the pandemic screwed them up. So they were acquired at low valuations. Those companies that acquired them gutted some of the uniqueness of what the age range needs for what my market does. And now they're just corporatized products, and it's lost what it actually was started from. So that's why, I'm like, the acquisition piece would devalue the company, because the uniqueness is the viewpoint of the founders in this space. But I do know that it will be a hard journey to IPO if the foundation isn't set right on these enterprise relationships for a business like EDU Rain, which is why our contracts with colleges are 3 to 5 years.
Yeah, well, I would imagine that the investors who would be in your sweet spot should understand that, and they're used to big, they do a lot of marketplace investing, and they're used to taking big swings like what you're doing, and shooting for that that IPO, which I think you should do. If you think that that's the best outcome, you shouldn't tailor sure, be mindful of who you're pitching to and what they might want, but, don't just say something you think they want to hear. So, because that will probably come through if it's something you're not super passionate about and or you don't think it's the right thing for the business. I would definitely continue to, in pitching investors, you want someone who buys into your vision, because if you have to distort something in order to get someone on your cap table, that's probably not going to be a great long-term partnership. So I would definitely recommend that you always, well, sure, it's great to research investors and know what they're interested in and all that stuff. You also want to find folks that believe in you and believe in your vision and will be supportive of that.
Hayden, I think you mentioned you invested in a company called Junovet. Is that?
Yeah, we incubated it.
It doesn't seem to me to fit the VC model. I mean, it's a veterinary service. Like, how does it fit with the VC investing model in your view?
There's lots of M&A activity in healthcare businesses like this. So in dental, in vet, in hospice, there are, if you can build, and the larger the brand, the more clinics, the more customers, then the higher multiple that private equity will pay for it. And so if you can build, it's a tech enabled, it will be a brand. So, we're just like in the dental space, we're building a national brand for preventive and cosmetic care, and one where if the gleam rate of it. And so as they scale, that the idea is to build a brand that's so meaningful that if you're in a new city, you say, I want to find a gleam rate, because even though I don't know the actual dental hygienist is there, I believe in the brand and I like the transparent pricing, consistent service. I know what to expect. And so when you do that, that is something that we have seen already, that especially in private equity, they'll pay up for that and they're acquired at attractive multiples. And so that's why we're excited about these spaces.
And it's technology optimized, right? In some sense, but you've added some tools to make them more efficient or less expensive. I don't know. So that's okay.
Yeah.
Thank you.
Yeah.
Oh, we have another latecomer, Yoni, and I wanted to give him the chance to introduce himself and tell us what he's working on. You're muted right now, Yoni, but.
Yeah, absolutely. Thank you. Thank you to Joe for the invite. My name is Yoni. I am generally up until now a career COO. I'm currently the CEO of a company called Margin, which is a machine learning powered predictive financial oversight platform for small businesses. I've taken part in a good deal of fundraising. I'm mentoring a handful of accelerators, and I'm an investor as well. I'm located in New York and moving to Miami soon. That's a little bit about me.
Do you have any questions since you're on stage right now?
Not at the moment. I appreciate it though.
Okay. Next question, because I wanted to ask a question. So you do invest in solo founders, and I know a lot of funds will not. So, and I know you incubate a lot of companies too, Hayden. Do you have any preference or strong feeling about introducing a founder to a co-founder, or whatever? You don't care?
We are we're both completely comfortable investing in sole founders, and our last couple investments have been in sole founders. I happen to think I would recommend that someone find a co-founder. Having been on the other side of the table, and I had a co-founder, and I'm so thankful that I did. It's just hard. It's nice to find someone with a complementary skill set. There's the there's all the the reasons why you expect of just at an under-resourced startup having more founders and complementary skill sets. Well, you can get more done and move faster. And then just on the emotional side too, there's nothing harder than building a startup, and just hopefully, if you have a co-founder who you get along really well with, hopefully, on all the days when you're having a bad day, hopefully they're having a good day. Just for moral support, I think can be invaluable. So I always recommend, especially if someone's considering starting a company, that if they can find a co-founder who has a complementary skill set, it could be a great thing for them. So that's always my advice to people. But we're completely comfortable investing in sole founders and have done so plenty of times before.
Thank you.
What are some things that you would like people to avoid when they're sending you a pitch deck? What are the things that just really just get on your nerves and just like, I don't want to see that, and that's an automatic out?
Great question. Thank you.
Sure.
Well, a lot of times people send me pitch decks that are just completely outside our wheelhouse. And so, something that we would, some buy, I don't know, it's something that just we've never invested in. That they had looked at our website, they would have immediately known that it's nothing that we could be helpful with. So maybe that's a pet peeve. I think it's always great to, anytime I have sent so many cold emails, both as an investor and also as an operator to investors. I think it's great to send cold emails, and I certainly respond to them. Although the only time I might not respond to them is it's clear that they haven't even taken the time to go to our website and look at anything about what we focus on. So I think that when you reach out to someone, just tailoring the message to them, and again, you don't have to be flattering them, or you don't have to, it doesn't have to be a long email, but just some recognition that you understand what they invest in, and because of this investment, or because what they said here, you think that you would be a good fit, is something that I would say is that's kind of the first thing that comes to mind, is tailoring. Not the pitch deck is not something you need to tailor to the investor, but just the message to them, and just framing why they're you think this might be a fit, because most of the decks that I get are stuff that are completely outside our scope.
Do you like an introductory pitch deck first and then want the longer one, the longer email secondary? Since there's now like different tiers of pitch decks, what is your preference? One and done?
No, I certainly wouldn't mind just getting the whole thing at once. I don't mind if it's an introductory. Now, if it's like super long, sometimes founders have multiple versions for a good reason in their deck. And there's introductory, there's one of the pitch, there's one of the appendix. Like it's not that I need all the appendix slide. And you definitely want to send something that gets the message, that delivers the message pretty quickly about what exactly this is. But I don't I'm totally happy getting kind of the broader deck. But definitely as a founder, you definitely want to convey, whether it's an email and or a deck, pretty quickly convey what it is that you're building.
Thank you.
I know you do early stage, but how important are advisors to you? Advisory boards?
I think it is definitely, they can be additive, but it's absolutely not a requirement. I never think, are there advisors here? It's never something I look out for or even I'm thinking about. But if you have great advisors, I would definitely recommend you showcase them and explain why, but it's certainly not a requirement or something I'm thinking, who are the advisors here?
Okay. Next question.
Hayden, there's been a lot of recession talk lately, and it was mentioned a little bit earlier. How does that kind of talk affect your plans for the next year, let's say?
We want to invest. There's this saying that I didn't come up with it. I don't know who did, but we would rather invest in painkillers rather than vitamins. So invest in things that are solving a painful problem in your life. And if you stop having access to that, then you realize the pain comes back, rather than oh, this is a nice to have, but if the shipment doesn't come, I'll just kind of forget about it. And in a recession or any kind of adverse economic environment, the superfluous things, the nice to haves, those are the first things to go for consumers. And so we're always want to think, there can be something that there can be a beauty product that people love so much that it's a painkiller, not a vitamin. So it's not just like healthcare stuff, but it has to be something that people just love, that they rely on, that it's not going to be the first thing to go if they're cutting back on expenditures.
Yeah, so I guess veterinary service fits into that.
Yeah.
Okay, thanks.
Yeah.
Next question. So speaking of pitch decks, because that is a big stumbling block with so many founders, what do you like to see, Hayden? Besides shorten to the
I think a story a pitch deck is basically a story that is, this is first, it starts with the team. This is who I am. This is my background. This is how, I saw this need, I experienced this need. I realized other people had this need. I think I'm going to solve this need by building this product. And it's kind of a linear story about this is me, this is my background, this is the problem I'm solving, this is why I'm uniquely suited to solve it. And if I solve it, then this is what will happen, is whether it's traction, exit opportunities, all this stuff. And so I think it's nice and it's most digestible to be told in kind of a linear narrative type format like this, rather than just disjointed pages with numbers that aren't really telling the story.
So you don't even care about the typical problem solution, blah, blah, blah. And I wrote a newsletter editorial not too long ago. My connectivity is a bit shaky. That's why my video is off, and I apologize for that. But I'm here. That the product is really the team when you're pitching to an investor. I just spelled it out.
Mm-hmm.
So really, you like to hear who's behind it first and why they're doing this.
Yeah, especially because oftentimes it's pre-launch, so all there is the team. So I think generally it's a good place to start.
Okay, thank you.
But every investor is different, and some people say put the team at the end. So it's not that, but that's just my preference, especially given how early we invest.
Thank you.
Mm-hmm.
So anybody else have a question? I wanted to say that Abby is working with another company, and the fact that she told her the co-founder couldn't be here today, and she didn't talk about that product at all. You want to give a brief description of that, Abby? Because it's
Yeah, and it's thanks to Bonnie that we met. So both Natasha, it's called the standard shoes, the standard footwear, and Natasha and I met here, and I've met other founders in my freelance job through Bonnie's investor breakfasts as a consultant on my side thing. But I'm working with Natasha, and it's basically Natasha's a force of nature, footwear for the battlefield and the boardroom. So she was a major in the US Army for 20 years, and women in the Army have to wear men's combat boots, which are not sized for women, so they don't fit. And you're wearing these boots for hours and hours and hours. And she took her shoe design background and her passion for creating shoes. She designs luxury Italian shoes and also went to design combat boots. So that's where the combination of the boardroom and the battlefield come into play. And I came on to help her with her brand storytelling, winning grants. She's Black, female, former Army vet, entrepreneur. I was like, you should have free money being thrown at you. And she has won now, since I started working with her, over $30,000 in grants last 4 months. So having a lot of success with that. As I said, she was at UBS this week and is at Macy's right now. And so really excited about what she's building, and omni-channel in terms of direct to consumer online, of course, with her luxury Italian, New York designed luxury Italian made shoes. And then looking at wholesale relationships, retail relationships, as well as such as to Macy's, as well as government contracts with her military grade combat boots.
If you don't mind, Abby, I am working with a TV network called Caregiving Worldwide, which is a new network that launched on RHS TV, and they have a new station that's starting called Tactical Rehab. I'd like to connect with you. It's all about, and I'm right now in the process of getting into their catalog to get onto the Army bases or armed services bases around the world. And I think that your product would be the right thing for them. The founder is not available until the end of June, but I would make that introduction for you.
Yeah, I'll put my email here in the in the chat.
Great.
Yeah,
Thank you.
and Hayden, I'd love to follow up with you about just multiple things that I'm working on in this similar brand space. I actually was named to the Forbes Next 1000 in the fall of 2021. So very CPG and consumer focused.
Fantastic.
Yes. Thank
I love when
you.
these things happen. It's fantastic. Seriously.
I sometimes feel like I get more energy from helping somebody else than that helps me with my business, because sometimes you're just so stuck in the hole, and you feel like you're just constantly shoveling dirt out, but it keeps falling on you. And then when you feel like you have like sharing an opportunity with somebody else, just feels like, okay, I made some progress. It just might be an internal energy thing, but it really just helps me move further along, because it's just how I do business.
Good on you. So next question.
Well, Hayden, I'm curious about your thoughts on ed tech. I mean, I know you do consumer service, so have you ever invested in an ed tech specific firm?
We have not. We have not. Are a lot of times we might get held up is that I would imagine the lifeblood of ed tech firms is selling into educational organizations, and that's the sales cycle that certainly some venture funds, I'm sure, are very well versed in and experts at. We are not, and so I think it's possible that for a lot of ed tech funds or companies, you might look at that and say, "Great opportunity, totally get it," but we don't think we can actually help move the needle in selling to these institutions. And because of that, we're probably not the best fit. So for any opportunities in the space I've seen, that's generally where we've ended up. So it's not to say never, but unlikely.
Got it. Thanks.
Anyone else? Here's your opportunity. Anything else you'd like to share, Hayden? I mean, I know you meet with a lot of, you talk to a lot of people, and there's certain things that, and investors know that, might not be readily apparent to founders. And what should they know? Besides the fact that, find a fund that knows your space.
Yeah, no, I mean, that's the biggest thing, but I would just, I would maybe come up with a list of companies that are similar to yours, not competitive, but whether it's in a similar space or, finding these companies and seeing who backed these companies, especially who are the early backers, assuming you're an early stage company. And those are the best people to really reach out to first. So again, I think cold emails are great. I send them all the time. I've sent them as a founder and as an investor. So that's great, but I would be really focused in spending your time, and rather than, just hitting up as many investors as possible and hoping one of them responds, being more tailored and thoughtful, and only reach and to cull that list down to the ones who would really be, you think would be perfectly suited to help you, and then sending them notes to explain why I see you invested in this. And because of that, we think that you might be interested in this company. That's the best use of your time, certainly, because while it can seem like you can cast a wide net and hit up a bunch of people at once, the emails that, if you kind of get a sense that it's a mass email and not tailored at all to you as an investor, and I think investors, those are the ones that they might just kind of quickly breeze through in their inbox. So as soon as you can capture an investor's attention, which you can do by making an email personal and maybe framing your company in some way like that's similar to a community they've had success with, and they'll kind of pique their attention because they want another one of those. That can be a great way to engage with investors.
I always think the personal touch is best as well.
I think it's so helpful to have this, and I really just appreciate the time. And, of course, I have a million questions that I'm not wanting to monopolize this time, but Hayden, thank you. It feels nice to sort of get your thoughts behind what people are wanting to pitch, because, I never like being in a situation where I feel like I'm the one like begging for money, but essentially that's eventually where I am. And it's not comfortable. Of course I would love to be able to, everybody who has a neck and a back is my customer, frankly. And it's, and that means it's everyone, and that's unrealistic. I get it. But convincing people about the value, it gets arduous, and seeing the value and just being able to hear your thoughts. I really appreciate it. It's not often that you get this time for someone just to say the good, the bad, the ugly, what they don't like, what they do like, and just having the frank conversation. So thank you.
No, feel free to ask your questions, Janice, because, women are, Abby Sugar aside, women are shyer when it comes to approaching investors and just saying what they need to say. So please feel free.
Okay, it's true. I had I got an investment, and when I was pre-revenue, I met with venture capitalists. I was offered, at that point, it just felt like so much money, $250,000, which is what I was raising. And then it was working with somebody when everything was coming to terms, working with somebody who I just inherently did not agree with. We were just not aligned, and I knew my brand, if I went there, it would be dead in the water. And I felt like that's not worth it to me. And I say this, he's my pillow guy. I'll just put it out there. So is Mike Lindell. And that's not somebody who I felt I could align myself to work with. And I knew, and that was before he went political. It's just, I had already researched his company and who he was. And when I was looking for ideal people to either license my product to, or to work with. And those are the one story, like I want to be better than, I want to but it's taken me so much longer to get further ahead. And I think that felt like a little bit of a setback, because I didn't get that any more of that kind of investment. So maybe I was naive, because I thought that, oh, that was really easy, and I just out of the gate. And then all of a sudden, wow, I've done the friends and family. I've done the taking money out of my retirement, which is, not an ideal situation. And now I'm at the point where I never want to come across as desperate, but now I'm at the point where I can see my runway. I run nonprofits. That's my background. And I know how to stretch a nickel. And I've done tremendous, when I look back, I've gone far for what I had. Now, not raising money is costing me money, if that makes sense. I'm missing out on opportunities, and I'm missing the ability to grow. So now I wasn't playing in the world of raising money and thinking I could do the bootstrapping thing. And now it's apparent that I can't. So I guess I'm trying, as Bonnie says. I sometimes wish I had it's a terrible joke, and please, no offense anybody, but just have the confidence of just a white guy who
mediocre middle-aged white man.
Yes.
Channel the confidence of an unqualified, mediocre middle-aged white man.
Yes.
Apologies.
Yeah.
You are exceptional middle-aged white men, and you're not. Don't worry about it.
Exactly.
All you have to do is channel your inner tech bro. Seriously, just channel your inner tech bro, right, Hayden?
Yeah, I mean, you need to think of this as anyone should be so lucky. You're not asking them for money, you're giving them an opportunity to jump on this rocket ship. And so I think I would definitely think of it that way, as you're not asking for a favor, you're doing a favor for them. And if they say it's not a fit, then listen to the reasons why, and maybe if they have good feedback, then incorporate that in your pitch the next time. But think about it, you're not asking for a handout, you're giving people an opportunity to invest in an incredible product and opportunity that should has the opportunity to make them boatloads of money down the road. And I would always, just in your mindset, that's how you should frame it, because that's the truth.
That's right. Well said. Thank you.
Thank you. I guess, yeah, it's reframing because, having spent 20 plus years running nonprofits, I think I'm always been begging for money. And so it's
it's not a chair, you're giving up part of your company, which is your blood, sweat, and tears. And so they are getting a lot in return for their investment.
And being comfortable.
Yeah.
Thank you. Needed that swift kick in the pants at 7:47 in the morning for me. That's a good way to start the day.
Yeah, you do. That's why it's also helpful some in cases to have a co-founder just for that support and somebody else on your team. Just wanted to say.
Hayden, several people here have mentioned that they've received grants of various, not huge, but impressive. Not a lot. What do you think about, the idea of a startup thinking about getting money from grants initially?
I think it's incredible. The goal for any founder is to retain as much of their company as they can. So raise as little dilutive capital as possible. And I say that as a venture capitalist who invests dilutive capital. So I think the goal of every founder is to take as little venture capital as possible. It's a necessary evil. And hopefully when you do take it on, you get some great help in addition to the money. So any way that you can fund a business through non-dilutive capital, grants and debt and all this kind of stuff, I think it's fantastic.
Right.
Does that help you when you see companies who have raised money from other people? Like, I've had a city near me invest in me, like their economic development. I pitched to that and won that award. And like, does that help in the pitch deck to see like, okay, you've won awards, you got people, who've already invested?
Yeah, I think, for us, given how early we invest, I think it's, anytime you have any kind of award or anyone showing any kind of faith in you, I think it's a great thing to showcase. It's not like a top, thing that we're necessarily, if you've done it, I would definitely share it. And I think it's part of your story. And so I would include it. It's something you should be really proud of. But yeah, I think it's a great thing to include along with all the other great things about the business.
Yes, especially if you've gotten funding.
Mhm.
Through the awards, you're through the grants, very important. I'll tell you a story. I was approached recently by a company who had won several pitch competitions, and their deck was really needed a lot of help. And I told them this, and they said, "We've won pitch competitions." I said, "How much money did you raise through those competitions?" Zero. I said, "There's a reason for it. It's too confusing. It's one thing to get up and talk in front of people, but it's the pitch deck that's the takeaway. And if it's confusing, that's not helpful, right, Hayden?"
Yeah, absolutely.
So Janice, this is your opportunity. Any other questions? And remember, this is a very supportive room. So
This is a great supportive room. Yeah, I feel like you all have been, honestly, I would love kind of like a workshop of being able to say like, here's my pitch deck. This is what I have. If you don't like it, let's fix it so I can present again. I really, I think I have a strong deck, and I've got a couple of investors who are interested, and one's been along the ride for about 3 years, and watching my company. I just, okay, here's a question. If you don't get, like, if you're kind of rejected, and Hayden, you give feedback, do you want companies to come back to you? And do you if they're not the right fit at that time, if your portfolio is having too many, too much risk, and you want sort of because I would imagine you structure your portfolio with, some safe, some risks, and like I would do my own personal investments.
So for us in particular, most funds oftentimes pass because something might be too early. For us, things are almost never too early because we're totally comfortable investing at any point. So because of that, in most cases, if we're passing, it's because it's outside our scope or we don't think it would be helpful. And, so because of those reasons, uniquely for us, it's updates are great, but when we pass, it might be more, final, to put for lack of a better word, than for another fund who might say, oh, you're too early, but come back when we've done X, Y, and Z. So, if I told someone it's not, it's completely outside our wheelhouse, then it might not be worth that founder's time to keep me updated. Now, I'm happy to get the email, but I wouldn't want them spending too much time thinking about updating us, just given it's just not in our wheelhouse. So unless something changes with our fund focus, then it might make sense down the road. So in general, I think it's always great to have an investor update list, and especially if someone says, I love what you're doing, it's just too early, or would love, always chronicle when someone says, you're come back when we've done X or Y or Z. And the best thing you can do as a founder is to then come back when you've done that and say, I know you mentioned you wanted me to do this, and I've done it. And that's a great platform from which to actually get them to invest. So it all depends on why they're passed. If it's just outside their wheelhouse, probably not worth updating them. But if it's just too early, then absolutely makes sense to send periodic and frequent updates.
Yep. Follow-up is always very important.
Have you ever, because your circle is investors and you probably know other investors, have you ever said, well, this is not in my wheelhouse, but here's the group that you should go to?
Definitely. Yeah, all the time.
Excellent, thank you. Well, I appreciate your generosity and your willingness to be, encouraging to founders and where they need to go, because raising money is there's a lot of money out there. It's just having the right investors and the right partnership with somebody, because it's a longer term relationship and it has to work.
Totally. Yep. Yeah, and you should be it's good. You want to be just as thoughtful about bringing investors on as they'll be in evaluating potential investment. You definitely only want people to come on who are aligned with you and your vision.
Yes, I'm going to share something that an investor who spoke a couple of years ago said. He said, how often have you heard that getting into bed with an investor is like a marriage? He said, it's not. If the marriage goes south, you can get a divorce. He said, you'll be stuck with that investor for the life of your company. And I thought that was great, but it's true.
Which is why I couldn't take that first investment. It really was, I heard that phrase and I was just like, wow, I couldn't do it. And, I wouldn't be where I am today. It made me after, I get scrappy.
Yep.
Yeah.
And that's okay. I don't mind gluing foam together.
Yeah. No, it's great. It will be all the better story when you write your memoir and chronicle.
Exactly. It's a chapter in my book.
That's right.
Yeah.
We have a few more minutes. Are there any last questions, or Hayden, any final words of advice that you'd like to impart as a former founder yourself?
No, I think it's great to be to have a large network of being community spaces like this, because I think a lot of the most valuable connections you can have are with people that are in the trenches with you, not with you, you don't have to be your company, but peers that are going through the same, in the muck of the early stage startup. I mean, everyone's going through it, and which, you only read about the good stuff, but everyone's having challenges. Companies that look like rocket ships from the outside. So the more relationships you can have with peers and other founders, I think will just be all the more invaluable with any founder. And that's certainly a lot of what I relied on when I was in your shoes as a founder. So I think it's always great to be members of communities like this, where you can build more strong ties with folks that are at similar stages of company building.
It's helpful, definitely.
Yep. Always good to have a peer support group, and they might know a strategic alliance or a founder or an investor who you need to get in touch with. You never know.
Absolutely.
Yeah.
Thanks for your help, Hayden. It's very interesting listening to your ideas. Really good.
Yeah, absolutely. It's great to meet everyone.
Yeah, thank you. You all have a great day. I appreciate the time. Thank you. And I will see you in 2 weeks.
Yes, thank you, everybody. And I hope everybody has a wonderful Memorial Day weekend. And thank you so much, Hayden. We'll let you get off to your conference. And thank you so much for taking the time with us this morning.
Sure thing. Yeah. Happy Memorial Day weekends, everyone. And yeah, have a good one. Thanks,
Yeah,
Bonnie.
you too. Thanks, everybody.
Bye.
But